Hello, sir. We can't hear, I guess.
Can you hear?
Now we can hear, sir.
Okay, thank you. Any doubt in the previous classes? Anything you would like to ask? Any doubt? Oh, super. Assignment trial balance tallied is good. Anybody has any other doubt? Nobody has doubt? Okay, if that is the case, we are moving to the next module or next area. That is financial statement. Financial statement of joint stock companies. What is the basic objective of accounting? I told you the basic objective of accounting is to find out the profit or loss, as well as to find out the financial position of the company, right? So that two objectives are achieved by preparing two statements. What are they?
Balance sheet.
Statement of profit and loss, and another one is balance sheet. Profit and loss can be found out by preparing a statement called statement of profit and loss. Financial position of the company can be found out by preparing a statement called balance sheet. That only we are going to prepare now. Okay, we are going to learn how to prepare these two statements and how to read, if you come across these two statements, how to read these two statements and what I can understand from these two statements. That only we are going to do now. Okay. You remember one of the classes we have discussed about the financial statement of companies by taking a company's real-time financial statement. Tata Motors, I think. Okay. So that only we are going to prepare now. So if you want to prepare financial statement, namely balance sheet and profit and loss account, what we need to prepare these two statements, all the ledger accounts, okay. All the ledger accounts we need. Anybody, those are online? Trial balance. We need trial balance. All those ledger account balances will be there in a statement. That statement is called as trial balance. So we need only trial balance from which we can take data and we can prepare this financial statement. Okay, please recollect the previous class understanding, that is the entire accounts can be of few categories, that is income, expenditure, asset, liabilities, and equity. Whatever you find in the ledger, the trial balance. Okay, you already prepared a trial balance. Okay, last class also we prepared a trial balance. And also for your assignment, you have prepared a trial balance. So first point is, in order to know the financial position, as well as in order to know the profit and loss or financial performance of a company, we need to prepare financial statements. So financial statements basically are two types. One is balance sheet, another one is statement of profit and loss. Statement of profit and loss is prepared to know the profit or loss, or you can say financial performance of the company. Whereas balance sheet is prepared to know the financial position of the company. Okay. In order to prepare these two statements, I need some data. Okay. Which one? Sharing? I'm not sharing anything because there is no file to share. So I'm just talking. Those who are online, I'm not sharing any PPT right now. I'm just giving you some inputs just to listen. Okay.
Okay.
Fine. So we have a statement called trial balance. You already prepared. From the trial balance, we have to get some data and we have to prepare these two statements. Is that clear, first of all? In order to achieve the objective of accounting, we need to prepare financial statement, or people may call it as final accounts. Financial statements are otherwise called as final accounts, which comprise of two things, two statements. One is balance sheet, another one is statement of profit and loss. Okay, to prepare these two statements, we need some data. The data can be taken from trial balance. So in exam, you will be given with trial balance. If you are asked to prepare the financial statement of a company, or if you are asked to prepare the final accounts of a company, we are relying upon trial balance. You have to be given with trial balance. Okay. So in trial balance, there are so many balances of ledger accounts, right? Balances of all the ledger accounts on a particular day is being are written in the trial balance. The balances of all the ledger accounts are written in the trial balance. So all those ledger accounts can be of 5 types, can be any one of these 5 types. What are those 5 types? Expenditure, income, asset, liabilities, and equities. Okay, this is already discussed in the class. This was already discussed in the class. I repeat again, the trial balance will comprise of lot of ledger account balances as on the last date of the accounting year. That, say for example, 31st March 2022 or 21, 23, like that. Okay, so that is a base for us to proceed further to prepare the financial statement. When you look at the trial balance, you have a lot of items. All those items should be recorded in the financial statements, either in the balance sheet or in the profit and loss account. Okay, right. So already what we discussed already in the previous classes, what is profit? Profit is equal to, what is profit? How do you find out profit? Sorry? Asset plus liability is equal to profit. What is profit? Anybody online? What is profit?
Income minus expense.
Income minus expenditure. So from this trial balance, you have to pick all those items which are incomes, and also you have to pick up all those items which are expenditure. These two group of items should be taken from the trial balance, and that need to be recorded in a statement called profit and loss statement. Okay, so if you compare total income minus the total expenditure, you will get the profit or you may get loss. Clear? So out of all the items in the trial balance, you have to only pick all those income and expenditure to record it in the which account? To record it in the profit and loss account or statement of profit and loss in a format. That format we will discuss now. Wait for some time. Okay. Then again, there are some left out items in the trial balance. Suppose there are 20 items in the trial balance, 15 items already taken. The 15 are either income or expenditure. You already considered that to record it in the profit and loss statement or profit and loss account. Now the left out 5 items may be of either equity or asset or liability. So you have to take these 3 group of items, liability, asset, and equities. This group of items you have to take and you have to write it in the statement called balance sheet. Okay, so balance sheet comprises of asset, liabilities, and equities. Okay, this is not individual items. It's a group of items. Liabilities, maybe there are 10 items. Asset may be of 5 items or 6 items, depending upon the trial balance, depending upon the company's ledger balances. Okay. Similarly, equity also may be 2-3 items. Okay. Equity is a group of items. Equity is a head. It's a heading. It's a nature of account. Okay. The owner's claim in the business. That also may be of 2-3 individual names: share capital, preference share capital, general reserve, profit and loss account. So these are all the examples for individual items under equity. Okay, so you have to pick equity, liabilities, and assets, and you have to write it according to the format in the balance sheet. Now, if you write all these things from the trial balance, all the items are taken out. You have taken all the items. Now you have to prepare these two statements. You have to close it and you have to total it. Okay, right. This is one thing. Another thing is there are some items which have not been recorded so far in the books of accounts. There may be some of the items. There may be some items which may not be entered in the books of accounts so far. Example, closing stock. You are buying goods, you are selling goods. Your ledger balances will not reveal how much is left out. Okay, purchase is total expenditure. Total expenditure, what you spend on purchases. Okay, sales is what income you earned. In between these two, you don't know what is the physical amount of stock left out and what is the value of that stock. Okay, so closing stock cannot be revealed just like that, like other ledger accounts in the trial balance. So there will be some items that will be given after the trial balance. In real life, they will be calculating it. Stock taking will take place and they will value the stock. And that need to be passed again entry. But we are not going to pass entry again. What we are going to do directly, we are going to give the effect on the financial statement. Meaning, you are not making any journal, ledger, and trial balance for some of the transactions. We call in accounting that transaction, those transactions as adjustments. That is called as adjustment. What is adjustment? Any transaction that has not been entered in the books of accounts so far, and it is going to be recorded in the financial statement directly. Example, closing stock. Depreciation. See, you bought an asset, you have been using it for 1 year. What is the value of such usage? We don't know. It has not been recorded in the books of accounts so far. Now we are going to find out what is the value of that part of fixed asset, what you have been using for 1 year. Are you able to understand? 1 lakh rupee is the machine value, you bought it on 1st April 2021. Now we are going to prepare the financial statement on 31st March 2022. So 1 year you have used this particular asset which was originally bought it for 1 lakh rupee. Now what is the worth of the machine that has been used for this particular year? That is called depreciation. The reduction in the value of asset. Reduction in the value of fixed asset is called as depreciation. Suppose in your company, they're telling you 10% of the original value of this asset is considered to be depreciation. Meaning these 10,000 rupees, 10% on 1 lakh is equal to 10,000. So 10,000 need to be considered as the amount of depreciation. It may not be there in the trial balance. They will be giving you some of the statements like this after the trial balance, outside the trial balance. So those items, those transactions you come across outside the trial balance is called as adjustment. Now it's a raw transaction actually. We follow double entry bookkeeping system. So a raw transaction, if you take that into directly the financial statement, it need to be recorded in 2 places. Why it is to be recorded in 2 places? Dual aspect concept. Each and every transaction that is going to be recorded in journal, we are writing in 2 places. You remember? Simple example, goods purchased, purchase account debit to cash. 2. 10,000 rupees worth of goods you purchased, but entry is made like this, purchase account debit to cash 10,000. Okay, so 2 places it will be recorded. Each and every transaction affects 2 accounts, 2 aspects. So we write in 2 places. Okay, but these transactions are emerging after the finalization of all your ledgers. So we cannot open again the ledger and write it. We can do so also, adjustment entry you can do, but that is again little process. So what we do, directly give impact these transactions in the financial statement. If that is the case, we have to consider it in the 2 places. Say for example, closing stock. Closing stock is an asset. And also you have to minus it from the expenditure. You bought it for 1 lakh. You have sold 80,000 worth of goods. But how much you sold, that is different. The cost of goods sold is 80,000. The cost of purchase was 1 lakh. Then what is the cost of goods left out with you? 20,000 rupees worth of goods left out. These 20,000 rupees worth of goods will be minused from purchase to show the original expenditure, and also it should be shown in the asset side of the balance sheet. So you remember two sides. One is minusing from the purchase. Another one is treating it as an asset in the balance sheet. Similarly, depreciation. What is depreciation? I told you, depreciation is a reduction in the value of fixed asset. In my example, 10,000 rupees is the depreciation. They will give you in the adjustment, provide 10% depreciation on machinery. Machinery value in the trial balance. So machinery value in the trial balance is 1 lakh. On 1 lakh, how much percentage? 10%. So you have to calculate 10% on 1 lakh, you will get 10,000 rupees. Now this 10,000 rupees is to be recorded in two places in the financial statement. One is, it is an expense. So you have to write it in the expense where it should be written, either balance sheet or profit and loss account. If it is expense, P&L account. Okay, expense and income only will go to P&L account. What is meaning by going to means we are just totaling the income and totaling the expenditure, and you are comparing these two. The left out items is called as profit or loss. Excess of income over expenditure is profit. The other way around is loss. Okay, you return in the P&L account in the heading called expenses by the name depreciation on machine. Again, the machine value will reduce because originally it was 1 lakh. Now it should be 90,000. So machine is an asset. Where you will record the asset in the financial statement? Balance sheet. Asset, liability, and equity should be recorded in balance sheet. Clear? So if it is recorded in balance sheet, original value is 1 lakh. Now 10,000 should be reduced. So in the balance sheet, you have to write machinery at cost 1 lakh minus depreciation for the year, how much? 10,000. So from now onwards, the book value of the machine is going to be 90,000. As on that date of finalizing your financial statement, the book value of the machine is going to be 90,000. So two places you record it. One is in expenditure side, another one is in balance sheet minus from concerned asset. Similarly, third one, debtors. You may have some amount of debtors in the trial balance. Say for example, debtor is given the trial balance as 1 lakh. What is debtors? The bills receivable or accounts receivable or the customer from whom you have to collect money. It will be in the name of sundry debtors or accounts receivable. Accounts receivable. Okay. Or trade receivables. They will call in different names. Trade receivables, accounts receivables, sundry debtors, or simply debtors. All these four are one and the same. Okay. Right. So suppose you are finding an item in the trial balance, rupees 1 lakh in the name of sundry debtors. Clear? So where you write these sundry debtors? We are preparing two statements, only two. Answer A is P&L account. Answer B is balance sheet. In which one you will record the debtors? Balance sheet. Why? It is an asset. It is an asset. So we have to write it in balance sheet, 1 lakh rupee. Suppose in the adjustment after the trial balance, you are finding a statement, you are finding a point that out of sundry debtors, 5% sundry debtor is not able to be repaying the money, meaning bad debt. 5% of the debtors are not going to pay off the money, bad debt. It is going to be bad. You are not going to be recovering. So it is a loss. So where you will record this loss now? First you have to record it in the P&L account in the name of expenditure. Okay, how much you have to write? 5% of 1 lakh, that is 5,000 rupees. Bad debts. Okay, 5,000. Similarly, same amount you have to minus it from the debtors in the balance sheet. Why? Hereafter you have to consider your debtor amount is only 95,000. 1 lakh will not come. So 5,000 is minus from 1 lakh. So it is to be written in the balance sheet only 95,000. Okay. Similarly, another example. You have interest. You borrowed a loan from a bank, 10 lakh rupee. You borrowed a loan. How do you know that? In the balance, in the trial balance, it will be there. Bank loan, 10 lakhs. It will be there. Okay, it's a liability. Where you will write this bank loan, which you are finding in the trial balance? Balance sheet liability side. Under liability outright. Okay. So you are writing 10 lakh, no problem. But in the adjustment, after the total of trial balance, there are some points. One among them is like this. Provide interest on loan 10% per annum. So 10% on 1 lakh, 10 lakh is 1 lakh. 1 lakh rupee is not paid so far. Or suppose in the trial balance, there is one item called interest paid on bank loan. 5 lakh is 5 lakh, 5,000, 50,000 is there. Assume 50,000 is there. That means it's already paid. Paid. So it will go to trial, P&L account expenditure side. Now in the adjustment, they are telling the total interest payable is 1 lakh. But already you paid is how much? 50,000. Yet to be payable is 50,000. It will the interest of 50,000. So you have to show total 1 lakh rupee interest in the profit and loss account. Rupees interest in the balance sheet, liability side, still payable. It's a liability, interest payable 50,000 rupees. Are you able to understand what I'm saying? First, for the trial balance, each and every item you have to read, and you have to come to a point what item is belonging to which category. Suppose there are 20 items in trial balance, means all the 20 items you read it. Okay, all these 20 may be of either equity or liability or asset or income or expenditure. If it is of income or expenditure, take them to what? Profit and loss account. If they are equity, liability and asset nature, take all those three things to balance sheet. That is first clear. Okay. Now any item is having some kind of connection with the adjustment. Some kind of items which may connect with adjustment. All the items in the trial balance may not have some connection with the adjustment. Okay, just now I told you land, machinery, loan, I told you, stock, I told you. Okay, there are some items. Insurance paid, that also may have some connection. Insurance paid. How do I know? It will be given in the trial balance. After the trial balance, there will be some items. Why number 1, 2, 3, 4, like that. I'll show you now. Okay. So all those items will be there. Only those items you have to consider in two places. Okay. Suppose there is a salary in the trial balance. Where will you record the salary? Expenditure side of the profit and loss account. Very good. Clear. But it is given 15,000 in the trial balance. Salary paid 15,000 is there. You return in the income statement or profit and loss account statement in the expenditure side 15,000 over. But in the adjustment, after the trial balance is over, there are some statements. There are some sentences. First sentence says that salary still payable is 5,000. What will you do now? You have to add this 5,000 with 15,000. So total salary to be shown in the expenditure side of the P&L account is 20,000. Clear? One point is clear. Again, this 5,000 I told you should be recorded in two places. One place is over now. Another place is balance sheet. Why it is to return in the balance sheet? It is a liability, still payable liability. So you have to write this 5,000 only in the balance sheet under which column? Liability column. In the name of salary outstanding or salary payable. Clear? Suppose insurance premium given in the trial balance 20,000. Premium, insurance premium paid 20,000. It is given in the trial balance. What will you do? It is a balance sheet item or P&L account item. P&L account item. It's an expense. You will write in the expense column of the profit and loss account. Very good. That's clear. But now in the adjustment outside the trial balance, there is one statement given to you. There is one sentence given to you. Out of the 20,000 insurance premium paid, 5,000 belongs to next year. 5,000 belongs to next year. So how much amount you will show in the profit and loss account in the name of insurance premium paid? Now how much was there in the trial balance I told you? Insurance premium paid 20,000 is the amount given in the trial balance. Now they are telling you in the adjustment, 5,000 out of this 20,000 belongs to next year. What does it mean? You paid in advance. The benefit of this 5,000 rupees is going to be revealed in the next year. If that is the case, what to do? This 20,000 is to be written in which side? P&L account, expense side. That's clear. What about the 5,000? We have to minus. Why you have to minus? It is paid for next year. We have to consider the income and expenditure of for finding out the profit and loss of the current year. So this 5,000 is excess paid, prepaid. You have to minus. Outstanding are still payable to be added. Prepaid need to be minus 5,000 rupees. So how much you will show in the P&L account in the name of the insurance premium paid now? Only 15,000. 20 you have to show, then minus 5,000. Net effect should be only 15,000. Then what about this 5,000? It is an asset. You have to write it in the balance sheet asset side. Is it clear? Any doubt to those who are online? Will be given to us. Adjustment will be given. From these two, we have to make two statements. One is P&L account, another one is balance sheet. To make these two, I have to identify all the items in the trial balance into 5 categories. One is income, example sales, interest received, commission received, rent received. These are all the example for income. Okay. Again, expenditure. I would identify expenditure. Expenditure example: purchase, wages paid, salary paid, commission paid, rent paid, interest paid. All those things. Okay. Next, another item is equity. Equity example is equity share capital, preference share capital, resource and surplus, profit and loss account, capital reserve, general reserve. Okay. Then liabilities. Liabilities example: debentures, bank loan, sundry creditors, bills payable, bank overdraft, etc. Then another item is asset. Asset example: land and building, machinery, plant, furniture, equipments, sundry debtors, bills receivable, cash in hand, cash at the bank, etc. Okay, so these are all the various items you will find in the trial balance. When you find an item in trial balance, immediately you have to think which item it is, which heading it belongs to, which category it belongs to, whether it is belonging to equity or liability or asset. If it is of these three nature, any one, we have to take them to where? Complete the sentence. If the assets, liabilities, or equities are found in the balance sheet, where will you record in the financial statement? Balance sheet.
Balance sheet.
Balance sheet. Suppose you are finding income or expenditure. These
Profit and loss.
recorded in profit and loss account. That's it. Okay, now we can work out one small question. Then you can understand better. Yeah, please. Yeah.
I purchased, let's say, foods at the rate of 100 rupees per unit.
Okay.
But I'm selling them at 120.
Okay.
So I'm taking a closing stock. I'll have to take it at the price, right? And
Okay. You are asking about how do we value the closing stock? Anybody? You bought it for 100. Say for example, you have bought 1,000 units at the rate of 100 rupees. You bought 1,000 units at the rate of 100 rupees. Okay. Now in the market, you are selling it for 120 per unit. 120 you are selling. 900 units were sold at the end of the year. 900 units were sold. How many units are left out? 100 units are left out. If you are going to sell these 100 units, one unit can be sold for how much? 120. But for how much you bought it? 100 rupees you bought it. Now his question is, we have to arrive at a value for that 100. 100 unit is the left out item. 100 units are left out. Closing stock quantity. Now I have to write value in the balance sheet as well as in the profit and loss account. Okay. So what value I have to take? At the rate of 100 or at the rate of 120? There is a rule, principles of conservatism. What is the rule? Closing stock should be valued at market price, that is 120 in our case, or cost price, that is 100 rupees in our case, whichever is less. Whichever is less. Suppose in your case now 100 rupees. Suppose market price is only 90. That time also you cannot value it at 100. You have to value it at 90 only. Okay. That is a principle of conservatism. But today in IFRS they are telling you have to value in the fair market, fair value. That's the concept called fair value. Fair value means at what rate this can be disposed today fairly. Okay, for that valuation technique is there, but that is not required now. That's for bigger assets. Closing stock, we can simply go with this method. We have 2-3 methods also. LIFO method, FIFO method, okay, weighted average method, and we have a simple average method. This is only a merchandising business, you are taking this easy. But you are a manufacturing company means you bought it for 100. Okay, if you are going to charge it in the cost of goods value, how much you have to charge? Is it 100 or today's market value? Long process. Okay. Now you assume it is to be valued at either market price or cost price, whichever is less. That's it. Okay. No, closing stock will not have depreciation. No. What is depreciation? That's what in my case I told. Second case is having lesser value. We're talking about lesser value. I bought it for 100, but today I can sell it only for 90 rupees. Do you mean this 10 rupees depreciation? Yeah, that is not depreciation actually. That same case. 100 rupees worth of material can be sold only for 90. You bought it for 100, but you can sell it only for 90. Maybe last year model. This year you cannot sell for higher price. It may be sold for lesser price only. That is discount. Discounted price they will give you. That's all. That is not called depreciation. That is automatically adjusted in the profit or loss. Suppose you bought a car for 1 lakh and you are selling it for only 90,000. The 10,000 is not depreciation. That is loss. 10,000 is loss. Okay, that total car sold. Suppose you are having 10 car, 10 into 90,000, 9 lakh. Minus total car purchased, 10 into 1 lakh, 10 lakh. So 9 lakh minus 10 lakh is equal to minus 1 lakh. That minus 1 lakh is called loss. It's not depreciation, loss. Suppose you bought a car and you are using it in your company. Suppose you are a manufacturer. For your CEO or for your directors, you bought a car. That car you are owning, your company is owning it. You bought it for 1 lakh. Okay, today it is only value of 90,000. That 10,000 is called depreciation. For fixed asset, reduction in value is called depreciation. For a car showroom, car is not a fixed asset. For a car showroom, car is a current asset. It's a stock, it's a good. That's it. Yeah.
This is good for merchandise, but if I'm manufacturing and I have raw materials, various types, then then valuing that raw material, because finished goods, I know the value. Finished goods is 150 rupees, but the raw materials will then you again go by the market value of this.
No, I told you, no, 4 methods are available. You can choose any one. First in, first out. Suppose you bought some 1,000 unit of raw material. Raw material A, you bought 1,000 unit. Okay, it is in the store. It is a store. The storekeeper is issuing for manufacturing. Production department is asking by writing a requisition slip. They are asking you. The requisition slip is coming to you. Please issue 100 units of material A. You are issuing. While issuing, you have to put some rate. What rate you have to put? That's a question now. Okay, you bought it for some price. Okay, today it may be available for some other price. It may be higher or lesser. For that, we have 4 methods of pricing. That's called pricing of issues. Pricing of issue of raw material to the production department by your own company. The stores department is issuing the raw material to the production department. What rate it should be mentioned? We have 4 methods for that. One is first in, first out. What is first in, first out? You might have brought material in different lots also. One lot will be having one price. Another lot may be having some other price. Suppose 1 rupee per unit I bought. Other day it is 1.1 rupee. 10 paisa increased. Now both the lots are there. First lot consists of 500 units, second lot consists of another 600 units. Now he is coming and asking 100 units. Okay, which unit I have to issue? If I follow last first in, first out, I will take the first lot and I will issue that with the same price what I bought. If I follow last in, first out, I have to take the latest lot and from there I have to issue and that price I have to charge. Okay, so another method, weighted average method. Simple average method. So it is the company's management to decide which method you are going to follow. Again, it depends upon the nature of the raw material also. So I will issue only last in, first out. Last in, first out. If it is a perishable nature, today came, you are issuing. Okay, then the first one what I bought before 1 week will be just like that lying there. It may sometime go waste because of perishability. Okay, so depending upon the nature of the goods or product or the raw material or the industry, you have to decide this method. That is cost accounting. What we discussed so far for 2 minutes is cost accounting. How do I price my issues? What do you mean by charging some amount for the raw material issued by the stores department to the production department so that the production department can calculate the cost of production correctly. Okay, that is left to cost accounting department. Okay, come back to this. Okay, let us take one trial balance and we'll try to prepare this financial statement. Any doubt before we go to prepare this? Is it clear? The logic is clear. Anyone from the online can tell me what is the point you have to remember in mind while you are preparing a financial statement? Financial statement, anybody? Anybody online? Can you tell me how do you prepare the financial statement? Yeah. Anybody? Nobody understood what I told so far? Yes? Nobody is replying.
Sir, from the trial balance.
Yeah, so trial balance is base what we need to prepare the financial statement. Okay.
Yes,
Next.
we have to observe equity, liability, and assets.
Okay.
Income or expenditure.
Okay.
Equity, liability, and assets will go to balance sheet. Income and expenditure will go to profit and loss account.
Good.
And
what about yes? What about adjustment?
Adjustment, we have to minus it from the expenditure if there were any bad debts and show it in the balance sheet if I'm not wrong.
Okay.
Yes, sir.
Anybody else? Is the file visible to you? I'm sharing one PDF file. Is it visible? Those are online?
No, sir.
No, sir.
1 second. Okay, the format already we written no in the previous classes. You remember? Or you want to write again? The format of profit and loss account, format of balance sheet. You have to remember one point. There are so many forms of business organization we discussed. 5 forms of business organizations we discussed. But we are now going to prepare the financial statement only for whom? Only for joint stock companies. Okay. So if it is joint stock company, you have to prepare in the format of the Companies Act. Is it visible now?
No, sir.
No?
No, sir.
PDF file. I'm sharing it, right? Again. Okay. Okay. Now you should be able to see.
Yes, sir. Yes, sir. Can see.
Yes, sir. We can see that.
Yes.
Right. So look at this. This is the format of balance sheet. I should increase the zoom. Yeah. So this is the format of balance sheet. If you are not written so far, please write down. Balance sheet of so and so company as on such and such date. Okay. Particulars, note number, previous year amount and current year amount. In the exam or in the classroom, we are going to work out for only 1 year. But in real life, there will be 2 years figure given in the same statement. What was my equity last year and what is my equity current? To know the comparison, they will be supplying you the 2 years figure. But now we do only for 1 year. If you know the logic of 1 year, then same thing is for all the years. Okay. So particulars, note number, current year amount, previous year amount. Okay. What is note number? Note number means the amount what is written against one of the items, how that amount has been arrived at. Is it rightly taken from the trial balance or there is some plus minus done? That workings need to be shown in the note number. Suppose, say for example, share capital. There is one item called share capital. Point number A is share capital, right? Suppose you are writing 5 lakh rupees here, 5 lakh rupees. How that 5 lakh has been arrived at from the trial balance? In the trial balance itself is 5 lakh or in trial balance only 4 lakh is there. There is plus and minus. That need to be shown it separately in the note number, working note. Okay. It will be note number 1. You have to give that note number 1, 2, 3. Starting from this. Suppose share capital is note number 1. Resource and surplus should be note number 2. Okay. And then money received against share warrants should be note number 3. Write it. Write this format. Balance sheet of so and so company as on such and such date. Particulars, note number, previous year amount, current year amount. Under that particular is a balance sheet. Okay. So first one is equity. Equity. And then second item is liability. Look at this. The first 1 and 2 comprises of equity. This first 1 and 2 is called equity. Third one and fourth one is liability. Third and fourth is liability. But you are given a heading only symbol. Equity and liabilities. First and second is equity. Third and fourth is liability. Say for example, equity share capital or simply share capital is there. Share capital should comprise of both equity as well as preference capital. Suppose in a trial balance, you are finding out an item, 20,000 equity shares of rupees 10 each, 2 lakh rupees. It is given in the trial balance. Where you will write here? In the name of share capital, point number A. Suppose in the trial balance, there are 3 items given. One is 20,000 equity share of 10 each, 10,000 equity share of 100 each, 5,000 preference shares of 100 each. If it is there, you would write these 3 in a note, take a total. The total should be brought into the balance sheet in the name of share capital, point number 1. I mean point number A. Is it clear? So what are the items relating to share capital is there in the trial balance? I have to look into and I have to bring all those items into the balance sheet, into the balance sheet in the relevant column. Second item, resource and surplus. What is resource and surplus? The accumulated profit undistributed to the shareholder is called resource and surplus. Previous year you earned some profit, but it is still there in the company. It was not given to shareholder. It will be there in the name of general reserve. It may be in the name of capital reserve. It may be in the name of profit and loss account itself. Okay, so these items are there in the trial balance. You have to bring that into your total in a note number 2. The total need to be brought into balance sheet under the heading called equity and liability. That too under the heading called shareholder fund in the name of reserves and surplus. Am I making sense? Is it clear? Each and every item you are referring from trial balance and you are recording it in the balance sheet or in the trial balance accordingly. Okay. Third item, money received against share warrant. Warrant means you are giving one document to the buyer which entitles the buyer to buy the equity share of the company later days at a concessional price. Okay, that is called warrant. Suppose you sold any warrant like that, you have to write in this column, point number C. But normally it won't be there in company's trial balance. Share warrant, forget about it. Okay. If it is there, you bring it and write it here. That's all. Suppose you are finding an item in the trial balance, share warrant, amount received against share warrant, 2000 is there. Take the 2000, write it here. Point number C under point number 1. That's all. If it is not there, leave it blank. Or you don't even write that item. A, B, that is important. C is mostly won't be there. Next, come to point number 2. Under equity, second point. What is that? You received application money, but you did not allot the share so far. It also won't be there in general. For a new, just now I have given an IPO. Before allotment is done, my final account date has come. So I'm preparing a final account. That time it may be there. Otherwise, it also won't be there. So only main thing is point number A and point number B. Share capital, point number A. Point number B is resource and surplus. Okay. How do you find out resource of last year plus resource created out of current year profit plus profit left out undistributed of the current year? Put together is called resource and surplus of current year. Suppose in the trial balance, they are giving you general reserve 5 lakhs. That will come here 5 lakhs. It is 7 lakhs. Out of that 2 lakhs, you are creating a reserve. So 5 plus 2, 7. Remaining 5 is there, no profit. Out of that profit, you gave 3 lakh rupees as dividend. Remaining how much left out? 2 lakhs. So 5 plus 2 is equal to 9. 9 lakhs should be shown in the resource and surplus. Surplus of the up to current year plus surplus of the current year plus reserve maintained, reserve created out of current year profit. These 3 things to be together, and you will write it in the working note. The result you will bring it here. Then third item, non-current liabilities. You remember I told you from the trial balance, you have to categorize the items into 5 categories: asset, liability, equity, no profit, equity, income and expenditure. Income and expenditure comparison is called profit. Okay, profit won't be there in trial balance. You are comparing the income and expenditure, you are finding out the profit. Okay, now while doing that, I told you liabilities. Liabilities are classified into 2 categories in the balance sheet. One is current liability, another one is non-current liabilities. Look at this. Point number 3 is talking about non-current liabilities. What do you mean by non-current liabilities? Any liabilities which need to be settled in a longer period of time, more than a year. The maturity period will be at least 1 year. Okay, normally more than 1 year. Example, bank loan, term loan, debentures, okay, mortgage, okay, secured loan. These are all the examples for non-current liabilities. Normally long-term borrowings from banks, point number A. Tax liability, if you are having tax liability, net liability payable, that comes under here. Then other long-term liabilities, if it is anything there, then long-term provisions. Provision means out against profit, you will make some provision for meeting out some kind of unseen or unexpected expenditure coming in future. Suppose there is a case against your company. The employee is claiming 10 lakh rupee compensation. It is going on in the court of law. We don't know. It may be in our favor or it may be in the favor of employee. So we create some provision now. Okay, that provision will come. Normally it won't be there. If it is there, you can take it. In the trial balance, if it is there, only we are taking. We are going only through trial balance, only with trial balance. We can't assume anything and writing here. Only what amount is there, what item is there in the trial balance, that will only come here. Okay, next. Point number 4 is current liability. Other than all non-current liability, other than long-term liability, everything is called current liability. Example for current liability, bank overdraft, bills payable, sundry creditors, accounts payable, and then salary payable, wage payable. Okay, rent outstanding. Payable means outstanding. These are all the things. If it is there, that we have to bring it and you have to write it accordingly. Short-term borrowing. Suppose you have taken loan from a bank for a short period of time, one year and less than 1 year. Trade payable means sundry creditors and bills payable together. Okay. Other current liabilities, apart from these, any other current liabilities, salary payable, rent outstanding, wage outstanding, interest outstanding, all those things will come under other current liabilities. Okay. Last one, short-term provisions. Short-term provision means any provision made against the profit for short-term period of time. Example, provision for bad debts. Provision for bad debts. I know this person is going to default, but I'm not sure about it. I doubt. That time I will make some provision. That provision is called provision for bad and doubtful debts. Okay. If anything is there, that should come under point number D, under point number 4 in the heading called current liabilities. So after taking everything of these items from the trial balance, if there is any adjustment is there, that also need to be adjusted. Okay. And you have to total it. The total will come under here. Total. Okay. Next, point number 2 is asset. Still you are referring the trial balance and you are scanning the trial balance for the items of asset. Assets. Okay. Non-current asset and current asset. 2 headings are there. Non-current asset and current asset. Non-current asset, which can be used for longer period. Example, land and building, machinery, plant, goodwill, patent, trademark, copyright, motor car, equipments, furniture, etc. Okay. Look at that. Point number 1, non-current asset. Under that asset, fixed asset also they are classifying into 2, tangible and intangible. What is tangible? I told so far there are so many assets that comprise of all tangible and intangible. Trademark, copyright, patent, goodwill. These are all the examples for intangible assets. Point number 2, A in point number 1, non-current asset. Clear to you? Suppose there are 3 items. You have to make a note. You have to prepare a small note. Tangible assets heading. Point number 1, goodwill. Point number 2, trademark. Whatever is there in the trial balance, you bring that, take a total, and you have to bring the total here in the name of intangible assets. You have to write intangible assets. Similarly, tangible assets. Sir, there are 3 items: land and building, plant, machinery. These 3 are there in the trial balance. Means take only that 3, prepare a note, take a total. Suppose it is 30 lakhs. Bring that 30 lakhs here in the name of tangible assets. Be careful that time. You have to check in the adjustment if there is any depreciation given. Suppose machinery value in the trial balance is 10 lakhs. In the adjustment, they're telling you 10% depreciation is to be charged on machinery. If that is the case, how much machine value in the note? 10 lakh minus depreciation of 1 lakh. So 9 lakhs would be taken in the name of machine in the note of tangible assets. Okay. Similarly for other assets also. Land will not have a depreciation. Except land, every asset will have depreciation. If it is there, you take it. Sir, you told every asset will have a depreciation, but they did not give. Don't worry. Machine is 1 lakh. No depreciation is given in the adjustment. You cannot create your own depreciation. Forget it. Don't worry about it. If they're given, you take it. In real life, you have to ask, sir, there is a machine. How much depreciation you have to charge? According to Companies Act, there is a percentage of depreciation. You have to take only that. Okay. Clear to you up to now? Fixed asset, tangible, intangible. Next, third one is capital work in progress. You are doing some construction. You bought a land and you are doing some construction on that land for office or any factory. You are doing it. It is not completed. It's still going on. Value that. How much is the total value now? That will be written in the work in progress. Capital work in progress. It is not production work in progress. Normally, work in progress means semi-finished goods, you will say. It is not about that. It is about capital asset, fixed asset. You are creating something. You bought some 1 acre of land, in that you are building one warehouse, but it is not completed. So far, how much is the value of that warehouse? That will come under, not in the name of warehouse, under the tangible asset. It should go into the category of capital work in progress. Okay. Fourth one, intangible asset under development. Suppose you found out a formula. Simple example. You found out a formula. For that, you are going for asking for a patent. You applied for a patent in the government of India. It is still in the process. You did not get the patent. How much you spent on that? How much you are expecting that value? That need to be recorded under intangible asset under construction or under development. Next month you may get the patent. The value you know, but now you don't know the value. Only the estimated value, you write it there. But normally it won't be there in general trial balance. Okay, because all the company may not be researching out something and developing some formula or some kind of invention. No. Okay. If it is there, you bring it there. Next, point number B under the non-current asset is non-current investment. Long-term investments made by the company. Suppose there is a bank deposit for 5 years, you made it. That will come under that. Next, deferred tax asset. If tax is paid in advance, it will come here. Paid in advance. Liability side, payable. Here it is, paid in advance. Next, long-term loans and advances, what we have given. Previous one, in the liability side, you have some loans and advances. No, that is what we taken. This is what we have given to our sister concern, our subsidiary company, our own parent company, or any other companies. Loans given by you. That's called asset, long-term loan and advances. How do you find it is given or received in the trial balance? In the trial balance, suppose loan is there. Where will you take? Whether to liability or asset? How do you find it out? Anybody? In trial balance, you are finding out an item called loan. 10 lakh is there. Whether you will take to liability side or asset side. Why? What is the logic? Because there also loan is there, no, long-term loan, you know. In the third item, in the liability side, look at the liability side of the balance sheet. Third item. What is third item? Other long-term liabilities. Why don't you take to loan, or why don't you take to long-term loan? Both are loan only, no? Third C under the liability side. First one D under the asset side. So how do you classify? Is it asset or liability?
Depending on debit or credit.
Yes. Now you got the point. Depending on the debit side or credit side, where the amount is mentioned in the trial balance. Suppose if it is given in the debit side of the trial balance, it's an asset. If it is given the credit side of the trial balance, it's a loan. Credit side liability, debit side asset. Okay. Based on that, you have to take it. Next, current assets, current investments, inventories, trade receivables, cash and cash equivalent, short-term loans and advances, other current assets. So current assets you have to categorize into 6 categories. Current investment means for time being you have some deposit, savings bank account, okay, or any other investments made in the stocks or securities of other companies. Inventories, your work in progress, finished goods, raw material stock, all those will come under inventories. Trade receivable means sundry debtors and bills receivable. Okay. Next, cash account and bank account will come under D. Short-term loans and advances, what you gave. Again, this also short-term loans and advances, what our company has given. If in the liability side, if in the trial balance, a loan is there within bracket short-term and it is mentioned, debit balance, it will come under here. Okay. Other current asset, any other assets apart from this in the nature of current. Say for example, prepaid insurance, prepaid rent, etc. will come under other current assets. Salary prepaid. Okay. Salary outstanding will come under other current liability. Other current liabilities. Okay. So after doing this, you have to take a total. So the total of total asset and the total of total liabilities would be matching with each other, so that the balance sheet is tallied. So this is the balance sheet format. Look at the format of profit and loss account. Profit and loss account. Profit and loss account last not there. Yeah. Profit and loss account. The same kind of format, but you have income and expenditure. Yeah. So this is the format. Statement of profit and loss account of so and so company for the year ended. For the year ended. Balance sheet you have to write as on a particular date. For P&L account you have to write for the year ended. Profit and loss account is for the period. Balance sheet is for a particular date. So first one, particulars, note number, current year and the previous year, same kind of format. Items to be returned. What we are going to do, we are going to compare the income and expenditure in the profit and loss account. That's all. So now after you prepare the balance sheet, the left out item in the trial balance is only for P&L account. What I have to take for P&L account? Income and expenditure. So first one, revenue from operation. Revenue from operation means sales. Sales income. Okay. If it is in trial balance sales, you have to bring that under revenue from operation. You have to prepare a note similarly. So what is the note number last in the balance sheet? Suppose note number is 10 is the last note in the balance sheet, means the first note number in the P&L account should be 11. But normally we prepare P&L account first, balance sheet next. Okay, you prepare all the note. Don't put the number first. Put the number at the last. So revenue from operation, that's called sales. How do you find out revenue from operation? Sales minus sales return. Sales minus sales return. Total sales minus sales return. Other income, other than sales income, if any income is there, that you have to bring it here. Interest received, rent received. Yeah, everything. Okay, come under other income. If you add these two, you will get total revenue. Revenue from operation plus other income. Total it. The third one you will arrive it. 1 plus 2 is equal to 3. Okay. Then fourth one is expenses, expenditure. Under expenditure, we have some category. We are not writing all the expenditure similar together. Okay, we write some classification with some headings. Okay. Of course, income minus expenditure is equal to profit. Income we have two types. One is core income, another one is other income. Core income is called income from operation. Other income plus these two together is called total income minus expenditure. We have some 6 expenditure column A, B, C, D, E, F, G. Okay. First expenditure is cost of material consumed. It will come only for those companies which are manufacturing something. Cost of materials consumed. How do you find out the cost of materials consumed? Opening stock of raw material plus purchase of raw material minus purchase return of raw material minus closing stock of raw material is equal to cost of materials consumed. It will be only for those companies which are manufacturing. Suppose I am doing only the buying and selling of something. I don't even write. I don't even write any amount there. I write the format, but in the amount column I'll put 0 or blank. That's all. Cost of material consumed is nothing but opening stock of raw material plus purchase of raw material minus purchase return of raw material minus closing stock of raw material. Okay. Next, point number 2. Purchase of stock in trade. Don't confuse. Just now you told purchase of raw material need to be added for finding out the cost of raw material consumed. But this is not a purchase of raw material. What is this? Purchase of stock in trade. What do you mean by purchase of stock in trade? The finished goods. You are not making it. You are just buying it. Suppose you are a furniture seller. What do? You buy furniture from the furniture maker, furniture manufacturer, and you will just display in your showroom. You will sell it. For you, the second item is important. Purchase of stock in trade. How much stock you purchased? Suppose you are a company which is manufacturing something as well as buying and selling something. That time you will have both. A also will be there, B also will be there. Okay. If you're only a merchandising company, only 2 will come. If you're only a manufacturing company, only the first one will come. If you are doing both will come. How do I know? From the trial balance. If in a trial balance, suppose it is given like this: purchase of stock in trade. What you do? Separately you write it. Suppose they are giving you purchase of raw material. What to do? You have to use that amount to calculate. Purchase of raw material is given in the trial balance. What you do with that? Purchase of raw material. You have to use it to calculate the cost of material consumed. That's all. Okay. Right. Next, third item. Change in inventories of finished goods, work in progress, and stock in trade. This will be only for manufacturing companies. What do you mean by change in inventory? Opening stock minus closing stock is called change in inventory. What you have to take is very clearly given here. Opening stock of finished goods, opening stock of work in progress, plus opening stock of stock in trade, minus closing stock of these 3. We are ignoring one thing here. Which one is not taken here? Finished goods is there, work in progress is there, stock is there. One item is missing. What item it is? No, I'm talking about stock in is there now. Normally work in progress, finished goods, and one more thing will be there as a stock now. Purchase of goods is not stock, right? It's an expenditure. Normally, closing stock will comprise of 3 items. What are they? Or stock consists of 3 items. What are they? If you say inventory, 3 items are there in the inventory. What are they? That's called what's the name for that? If you say inventory, what do you mean by inventory? Okay. Is it only finished goods inventory? Then what else? That's called finished goods, no? Anybody online? What do you mean by inventory? What and all is included in inventory?
Raw material, work in progress.
Work in progress.
Excellent. Raw material, work in progress, and what's are told is finished goods. So
Finished
3
goods.
things are to be included. But in this case, only what is there? Which is missing here? Raw material is missing here. Why
Raw
material?
material.
Where we have taken the raw material? Raw material is already used to find out the cost of goods consumed, cost of material consumed. So you have to be careful. If you are a manufacturing company, your opening stock and closing stock is already adjusted in calculation of cost of materials consumed. That is why it is not coming here. Look at this. Change in inventory excludes the raw material. Why it is excluding? It's already taken care in the calculation of cost of materials consumed. That is why it is not coming under the change in inventory. So change in inventory in this format refers to the change in opening and closing of finished goods, work in progress, and stock in trade. Don't confuse the word finished goods and stock in trade. Stock in trade here refers to the goods what you are buying as it is and you are selling as it is. That's called stock in trade. Finished goods means you are making it. You made it. Okay. So last year, when last year was accounting year closed, how much was the closing balance of finished goods? How much was the closing balance of work in progress? How much was the closing balance of stock in trade? All these three will become the opening balance of current year. Take the total. Minus the closing stock of these three at the end of the current year. There will be a change, there will be a difference. That difference is called as change in inventories. It may be plus, sometime it may be minus also. Suppose opening balance was 1 lakh, total, three things together. Work in progress, finished goods and stock in trade together is 1 lakh, was 1 lakh in the beginning. Now in the closing, it is going to be 1,10,000. So 1 lakh minus 1,10,000 is equal to 1 lakh minus.
Sir, we lost your audio. Hello. Sir, we lost the audio.
Test. Online, can you hear me now?
Yes, sir.
Okay, right. So this format is fine. Now expenditure we are talking about. So cost of materials consumed I explained to you. Purchase of stock in trade I explained to you, and then change in inventory. So this opening stock will be there in the trial balance. Closing stock will be there in opening stock will be there in trial balance. Closing stock won't be there in trial balance. Then where you find out closing stock? Closing stock anything. Closing stock of raw material, closing stock of stock in trade. Where you can find this? In the adjustment. Okay. So whatever there in the trial balance is called opening, whatever there is in the adjustment is called closing. Right. Then employee benefit expense. All expenses relating to employees, if you are finding in the trial balance, that you need to take and take a total. The total amount should come under employee benefit expense. Say for example, wages, bonus, salary, etc. Okay. Whatever the expenditure you are finding that it is relevant to employee benefit expense, you have to make a note, and that note number you have to mention in this column of note number against employee benefit expense, and you have to write the amount here. Okay, in this, if there is any adjustment, you have to plus minus. What is plus minus? Suppose salary given the trial balance 20,000. In the adjustment they are telling you 1 month salary is due, that is 2,000. So how much you have to take in the salary here? 20,000 is given in the trial balance, 2,000 outstanding given in the adjustment. So total salary to be written here in the employee benefit expense is 22,000. Suppose in the adjustment they are telling you 2,000 rupees paid in advance. What to do? 18,000. Okay. In the first case, the 2,000 given in the adjustment should go to liability side of the balance sheet also. Other current liabilities. Okay. The second example, 2,000 rupees given in the adjustment as prepaid should go to balance sheet in the name of other current asset. That is prepaid salary. Salary paid in advance. Okay. So adjustment item should appear in two places compulsorily. Okay. Why? That's the logic. Dual entry. Okay. Next, finance cost. Any interest paid, bank charges, interest on debenture, interest on loan, all those things should be added together, and you have to write against finance cost. Finance cost means any cost incurred to pay interest. Interest on loan, interest on debenture, interest on anything else. Okay. Or bank charges. The bank will charge you something for current account. Next, depreciation and amortization. Just now we discussed, no? Depreciation is for fixed asset. Amortization is for intangible asset. Tangible fixed asset, value reduction means depreciation. Same thing for intangible asset means called as amortization. Suppose patent given in the trial balance is 1 lakh. In the adjustment, they are telling write off patent of 10%. Write off patent of 10%. So original value of patent was 1 lakh. Now how much you are going to write off? 10%. That is 10,000. The 10,000 is called as amortization. On machinery, if you write off some 10%, that is called depreciation. So you have to be careful. What are the assets there in the trial balance? Are they having depreciation or amortization? If it is there, accordingly you have to take, calculate the percentage, total it in a working note. The total you bring it and write it in the heading called depreciation and amortization. Then other expense. Other than this category, cost of material, purchase of stock in trade, change in inventory, employee benefit expense, finance cost, and depreciation. Other than these six, any expenditure is there, that expenditure will come under other expenditure. Example, donation given, sundry expenses, miscellaneous expenses, preliminary expenses. Any expenditure other than that 6 items, all expenditure should be recorded under other expenses. Suppose marketing expenses, advertisement, where you will write it now? You are finding an item in the trial balance. Advertisement, debit side 10,000 rupees is there. Where will you write? First of all, it's written in balance sheet or the P&L account. P&L account. That's confirm. Income or expenditure. That's also confirm. So we have tried which expenditure. There are so many expenditure here, no? Under which heading you will write it? Please tell me why this much you are thinking. Other expense, that's it. No, why so much you are thinking? Other expense, advertisement. Goods issued for free sample. Goods given for free sample. Other expenditure. Traveling expense. Simply it is given traveling expense. Who has traveled is not known. Simply traveling expense. Where you will write? Other expense. Okay. So after writing all these things, you take a total of these 7 items. Only expenses you take a total. Cost of materials, purchase of stock in trade, change in inventory, employee benefit expense, finance cost, depreciation and amortization, and other expense. Only these 7 items you take a total. The total is called as total expenses. So from the total revenue, that is point number 3, minus this total expenditure, you will get profit before tax. Profit before tax. From that, minus tax, you will get profit after tax. That's all. Okay, there are so many items given. Don't worry about that. Only that much. Okay, so this is called profit and loss account. Pro forma. This is given by whom? Why should you follow this? Who is recommending us to follow this? Who is compelling us to follow? Who is giving this format to us? Indian Companies Act 2013. The Companies Act is telling us to follow this format. Why? Why they are telling us to follow this format? Since we registered ourselves as a company. If you have not registered as a company, this format need not to be followed. I have an appeal to all the BBA and BCom or so-called that commerce students. You have to write the P&L account and you have to prepare the balance sheet only in this format in the exam. If you write anything else what you studied already, you will get 0. I repeat again. You will get 0 if you are not following this format. Maybe this also not reaching you because some of you may be absent. Okay, you know the P&L account, you know the balance sheet. But that is not the one what I am teaching here. You have to write only this. Why? Because we are studying for companies. Companies should follow only this format. That's why we are doing this. Okay. Don't do any other format. Okay. Right. Whenever you are free, go to the website of any of the companies you like and see their balance sheet as well as their profit and loss account, as we discussed in the previous classes for Tata Motors. Okay. Right. Now let us take one question by numbers, okay, with values, and we try to understand the balance sheet as well as the profit and loss account by putting the numbers in the calculation. Look at this. Illustration number 8. There are some item given to you. What is this? This table, what does it mean? Trial balance. Exactly. Very good. Trial balance is given to us. Okay. From the following particulars, prepare statement of profit and loss for the year ending March 31st, 2017, showing profit before tax as per Schedule 3 of the Companies Act 2013. Okay. Companies Act is giving a schedule number 3. That schedule number 3 talks about the format. The format what we discussed so far. Okay. Only we have to prepare which one? Only in this question, only we have to prepare P&L alone. Okay. So we have to look for the trial balance to get the items of income and expenditure alone. Okay, let us go through one by one. Plant and machinery, is it income or expenditure? It's an asset, so it won't come under P&L account. Forget it. Land, same case. Okay, depreciation on plant and machinery, it is an expenditure. It is an expenditure. Okay. Purchases within bracket adjusted. How much? 4 lakhs. So purchase is a expenditure. Okay. Next, closing stock 1,50,000. Wages 1,20,000. Closing stock, it's an asset. It's an asset. Okay. Next, wages, expenditure. Sales, income. Sales is the first line of the P&L account. Next, salary, expenditure. Bank overdraft, What is bank overdraft? You have taken more money from the bank than how much you are keeping in the balance. That's called bank overdraft. So it is an expense. What it is? Sorry?
It's
It's
a liability.
a liability. Liability. 10% debentures issued on 1st April 2016. 1 lakh rupee. What is this? It's a liability. You borrowed money from the general public by giving a document. The document is called debenture. And you agreed to pay interest of 10% per annum. How much you borrowed? 1 lakh you borrowed. When you borrowed? 2016 you borrowed. Okay. When are you going to prepare the balance sheet? P&L account? March 17. Then when did you borrow this? 1st August. Sorry, 1st April. What is the time period in between this 1st April to 31st March? Exactly 1 year is there. 12 months are. Okay, keep that also in mind. So how much you have to pay interest? How much amount?
10%.
10,000 for 1 year. Okay. Keep in mind whether it is paid or not, we don't know. We have to check it. Next, equity share capital is an equity. It won't come under P&L account. Next, preference share is also a part of share capital. It also won't come under P&L account. It should go to balance sheet. Now, take all of you take the profit and loss account format. Profit and loss account of whom? Name is not there. Okay. Profit and loss account for the year ended 31st March 2017. Take a table like this. Statement of profit and loss for the year ending 31st March 2017. Take this format. You please note the change in this answer and your format. Your format had 2 columns. One is for previous year, another one is for current year. Now we are having only for current year. Okay. Particulars, note number, amount. Since there was 2 year, we write previous year and current year. Since it is only 1 year, we just write amount. Okay. So profit and loss statement for the year ending 31st March 2017. Particulars, note number, amount. Okay. So you have to refer from the format and 2-3 times you refer, then it will be memorized by you. Okay. First item is income from or revenue from operations. Revenue from operations. Revenue from operations. How much revenue from operation? The question. Revenue from operation means what? Sales. How much was the sales? In the question, in the trial balance, sales was 10 lakh. Net. Net means what? Net means after minusing the sales return. Suppose there is a sales as well as sales return in the trial balance means what do? You have to take the sales minus a sales return. The remaining balance you have to bring it to the P&L account. It is done already. So we are taking that directly. Net sales. How much? 10 lakhs. There is no other income. Look at the trial balance. There is nothing called income. Income means it will be the only credit side of the trial balance. Credit side, 10 lakh is there, that is sales. Another 2 lakh, that is capital bank overdraft. 1 lakh is the debenture. Equity is 2 lakh and preference share is 1 lakh. There is no more credit. So no other income is there. So other income 0. Okay, total income is 10 lakh only. Total income is 10 lakh only. Then expenses. You have to write all the expenses one by one. First expense in the format is what? Cost of materials consumed. Here it is cost of materials consumed. How much is there? Purchase is there. How much? 4 lakhs is there. That I'm taking 4 lakhs. This company is a manufacturing company. So I'm writing 4 lakh in the cost of materials consumed. Normally it is opening stock of raw material plus purchase of raw material minus purchase return of raw material minus closing stock of raw material. If these are all the items given there in the trial balance, you have to do this all calculation. The rest of the amount will come under material consumed, cost of material consumed. In this question, nothing is there, so we take directly only one purchase. Okay. There is no closing stock also given. in the adjustment. Okay. How much it is? 4 lakhs. Next, employee benefit expense. The change in inventory. We don't have change in inventory, so I'm not writing it. Okay. Next one is employee benefit expense. What are the employee benefit expense there in the question? Check it. Salary how much? 1,20,000. And wage 1,50,000. Anything else is there? Employee benefit expense, but he has taken only 2 lakhs. Why? Wage how much? Is it 1,20,000 or just 20? 1,20,000. Then okay.
Wage 1,20,000 and salaries are 18.
Okay. Then it is 2 lakhs. Yes. So 2 lakhs. Employee benefit expense within bracket write wage plus salary. Normally you have to make a note, but it is only 2 items. So we're writing in the answer itself. Wage plus salary. 1,20,000 plus 80 is equal to 2 lakhs. Next, finance cost. Finance cost. What is finance cost? Interest. Interest is there in the question. How much? There is 1 lakh. 1 lakh is the loan you borrowed by agreeing the rate of interest of 10%. So 10% on 1 lakh is 10,000. That's what is written here, 10,000. Finance cost within bracket interest at the rate of 10% on 1 lakh. How do I know that? It is given here 10%. Time period, how do I know? When I borrowed? 1st April 2016. When I am preparing the final account? 31st March 2017. So from April 1 of the last year, 31st March of the current year, total of in between number of period is 12 months. So 1 year. So 10% on 1 lakh is equal to 10,000. Next, there is a concept called amortization and depreciation. It is given in the trial balance. How much? Depreciation how much? 16,000 is given in the question. 16,000. Look at this. 16,000. That 16 I am bringing here. 16,000. That's all about expenditure. Take a total of expenditure. Total of expenditure is equal to 6,26,000. So 6,26,000 is the total expenditure to make a sale of 10 lakhs. So next line, profit before tax. Profit before tax. Profit before tax. You can do it like this only. Yeah, that will be simple. Next time you do like that. Because only 3 columns. Okay. So profit before tax is 3,74,000. How did you get it? Total income minus total expenditure. 3,74,000. Is it looking easy? When you are talking about the format, it was little difficult. Now it looks little easy. Yeah. Take another question. Okay, we'll take one more question in the balance sheet. So this table gives you the detail about each and every item in the expense column. I explained to you. Later you can read this also. Okay, look at this question. Question number 6. From the given particulars of Shine and Bright Company Limited as on asset March 31, 2017, prepare balance sheet in accordance with the schedule number 3. Okay, even though if they are not mentioning also, we are going to prepare according to schedule number 3 only. Okay. This is the balance given to you. It's not exactly a trial balance. They given you a balances. Okay, abstract or extract from the trial balance. What are there? preliminary expense 2.4 lakh, 10% debentures 2 lakhs, stock in trade 1.4 lakhs, cash at bank 1.35 lakhs, bills receivable 1.2, goodwill 0.3, loose tools 12,000, motor vehicles 4,75,000, provision for tax 16,000. From this, you have to prepare a balance sheet. So balance sheet format you take. You can put the just number. This file I'll share with you. You can refer the question later. Only answer you can prepare now. So balance sheet of so and so company. What company it is? Shine and Bright Company Limited. Balance sheet of Shine and Bright Company Limited. As on 31st March 2017. The given thing is not a trial balance, so it won't tally. So we are just writing it wherever it is applicable. Okay. So write down this balance sheet, equity and liabilities. Under that, first one is non-current liabilities. We don't have the equity. Equity share is given in the question. Is it there? Look at the question. There is no equity given, so we cannot write it. Okay. So write it only long-term borrowings. Long-term borrowings, which one is there? Out of these, can you identify what is long-term borrowings? Debenture is long-term borrowings. Write it. Debenture. How much? 2 lakh rupees. You did not write debenture. You write long-term borrowings. If you don't understand within bracket, write for your own understanding. That is debentures. 2 lakhs. And then current liability. What is the current liability here? Current liability is provision for tax is a current liability. Provision for tax, 16,000 rupees. That's all about the equity and liability. Point number 2, assets. This is not a full-fledged balance sheet. Please understand. Whatever the information given to us, from there we are preparing it. That's all. So point number 2, asset. Under that, point number 1, non-current asset. Look at the items given in the balances. Current asset, non-current asset. Under that, point number A, fixed asset. Any fixed asset is there? Motor vehicle is tangible fixed asset. Motor vehicle is tangible fixed asset. So write it, 4,75,000. If there is any more asset, suppose land and building, plant and machinery, you have to add and write it. In this question, only one is there, we are writing directly. Okay, tangible asset. Then intangible asset. What is intangible fixed asset? Goodwill is intangible. So we take goodwill, that is 30,000 rupees. Goodwill. That's all about it. Next, other non-current asset. What is other non-current asset? Preliminary expense is there, 2,40,000. And then what else is there? Loose tools are 12,000. Is it another non-current asset? What else is there? Other non-current asset. Look at the note number. Note number what? Other non-current asset. Other non-current asset is sorry. Stock in trade is asset that comes under inventory. Okay, that comes under inventory. So other non-current asset, under that we have some heading. Note number 5. Look at the note number 5. Note number 5, we have taken inventory. Why inventory? No, one second. Other non-current asset, how much is mentioned here? 2,60,000. Other non-current asset. What else is there? Other non-current asset. Other non-current asset is preliminary expense 2,40,000. That's all. 2,40,000. You have to take 2,40,000. This is not 2,60,000. It's 2,40,000. 2,40,000. Other non-current asset is 2,40,000. Current assets. Current asset. Under current assets, we have inventory. Inventory, how much is there? Inventory means stock in trade. Yeah, 1 lakh. 1,40,000. And any other items are there? Loose tools 12,000 is there. Loose tools 12,000. Put together is 1,52,000. Inventories. Trade receivable. What is trade receivable? Bills receivable and debtor is called trade receivable. Bills receivable plus sundry debtors. Both put together we call it as trade receivables. So how much is there in this question? Bills receivable is 1,20,000. Am I right? Bills receivable is 1,20,000. Bills receivable is 1,20,000. 1,20,000. Next, any other item is there? No. Under bills receivable, only one is there. There is no sundry debtors. Next, cash and cash equivalent means cash in hand and cash at the bank. How much that is? 1,35,000. Take 1,30,000, 35,000. That's all. It's only a simple example how to write it. Okay, it's not a full-fledged balance sheet. Okay, we do one more for full-fledged balance sheet. One second, I'll take another question. I think this document does not contain another question. I'll take another document. Actually, I kept a lot of files there in the LMS. I don't know, some problem has happened. I'll again realign it up from my laptop. As of now, we can use this file. Okay, I'm sharing another file. Is it visible to you? Those who are online?
Yes, sir.
Yes, sir.
Yes. See, this is the one you should not do it. Look at this. Like this, you should not do. That's what I told you. I'm showing a P&L account. You should not do in this format. I think this is not containing that. One second. Just once again. This is what we discussed now. The same file we discussed, or is it different? No, just give me a minute. Okay, this has a lot of question. We'll do in this one or two. Now the new file is visible to you online.
sir.
Yeah. Okay, let us take this question. Yeah. Look at the 7th question. Or you want to, you can go a little more easier one. Yeah, 6th question, look at this. You are required to prepare balance sheet and statement of profit and loss account from the following trial balance of Haria Chemicals Limited for the year ended 31st March 2021. This is the trial balance given to you. Okay. So like this, we are given with trial balance. We have to prepare P&L account and the balance sheet. Just to go through this for a minute, what are the items given there? Just to go through the trial balance. First, you have to carefully go through the trial balance fully. Then only you can understand what is given there. Inventory 6,80,000 Furniture is there, discount is there, loan to directors, advertisement, bad debts, commission, materials consumed, plant and machinery, rentals. Okay. And then current account, cash, interest on bank loan, preliminary expense, fixtures, wages, consumables, freehold land, tools and equipment, goodwill, trade receivables, dealer aids, transit insurance, trade expenses, distribution, freight, debenture interest. So these are all the debit side items. Then credit side items are equity share 25 lakhs, debentures 5 lakhs, bank loan 6 lakh 45,000, trade payable 2 lakh 81, sales, rent received, transfer fee. Transfer fee means share transfer fee from one person to another person. If you are changing the name, you have to pay some money. That is income for the company. Profit and loss account of the last year, the balance of P&L account. Depreciation on machinery is 1,46,000. The total of the trial balance is 85,35,000. Okay, and additional information is only one is given. This is called adjustment, right? Adjustment. Only one is given. That is closing inventory of the company as on 31st March 2021 is 8,23,000. From this, we have to make a balance sheet as well as a profit and loss account. Okay, let us try now. First one, you take statement of profit and loss. Statement of profit and loss. Aria Chemicals Limited, statement of profit and loss for the year ended 31st March 2021. Please write down. This file also I'll share with you. You can refer the question from there. Okay, so you know the format. Revenue from operation is the first line starting in the P&L account. Revenue from operation. Take the format now. Particulars, note number, and amount. Okay, particulars, note number, and amount. Revenue from operation. How do you find out revenue from operation? Revenue from operation is starting from sales or based on sales. Look at the trial balance. How much sales is given? Sales will be always in the credit side. So sales, how much is there? 42,68,000 is there. 42,68,000. I brought it here. If there is any plus minus, I have to do it. What plus minus I refer to? Sales return. Okay. Or suppose in the trial balance they are giving you credit sales, cash sales. Separately it is there, means you have to add together and you have to minus the sales return if it is there. Okay. So sales income is taken care. Revenue from operation is brought down. Next, other income. Other income. Okay, revenue from operation. Point number 2 is other income. What do you mean by other income? Except sales income, any other income is there, that's called other income. Go to the trial balance and check it. What are the other incomes are there? Rent received is there in the trial balance. Okay, and transfer fee is there. Only 2 items. Income will be in the credit side only. So look at the credit side of the trial balance. Equity share, debenture, bank loan, trade payable, sales. Sales already taken care. Rent received is there 46,000. Transfer fees 10,000. Profit and loss account is the last year balance. That is not a other income. Okay. And then depreciation is not a income. Provision for depreciation is a liability. Okay. So only 2 items are there. Rent received and transfer fee. So you have to write a note like this. Note number 7. Other income. We don't know the number now. So you just don't write the number. You just write a other income heading. Under that you add these 2 and take the total. Finally, after doing everything, you can number it. Okay. Numbering should start from balance sheet first item. And the last item of balance sheet, next number should be the first number of P&L account. Okay. So other income 56,000. Bring it to balance profit and loss account. 56,000. Right here, other income 56,000. Okay. Now next, total income. Total income. Total income is equal to revenue from operation plus other income. That is nothing but 42,68,000 plus 56,000. That is equal to 43,24. 43,24,000. Is it clear? Any doubt up to this? Taking sales, taking other income, totaling it. That is the first part of the P&L account. Second part is expenses. Point number 3, expenses. Expenses underline. What are the expenses you have to take? There are 7 expenses. One is cost of material consumed. Second one is purchase of stock in trade. Third one is change in inventory. Fourth one is employee benefit cost. Fifth one is finance cost. Sixth one is amortization, depreciation. Seventh one is other expenses. If you take all these total, 7 total, that is called total expenditure. Okay. Now we look for these 7 items. Okay. First one is cost of material consumed. Go to the trial balance. Expenditure will be in the debit side. So debit side, look at the cost of material consumed. It is given there, material consumed. How much? 23,19,000. If it is not given, you have to find it out. How do you find it out? Opening stock of raw material plus purchase of raw material plus any expenditure on the purchase of raw material minus purchase return of raw material minus closing stock of raw material. Please write down. Cost of material consumed. Somewhere you can write it. Cost of material consumed is equal to cost of material consumed is equal. If it is given the question, directly write it. No problem. In this question, it is given like that only. But sometime it may not be given like that. You have to calculate. How do you calculate? It is equal to cost of, opening stock of raw material plus opening stock of raw material plus purchase of raw material plus transport cost on purchase of raw material, transport cost on purchase of raw material minus purchase return of raw material minus closing stock of raw material. Okay, if these items are individually given in the trial balance, you have to apply this logic and you have to find out the cost of materials consumed. This is only for whom? Only for manufacturing companies. If you are not a manufacturing company, this item will not be there in your company at all because you don't buy any raw material. Right. So in this question, there is no need of doing like this. It is given in the question directly. How much? 23,19,000. Take and write it in the P&L account against material consumed, cost of material consumed. Next item in the profit and loss account is, next item in the profit and loss account should be purchase of stock in trade. But in this question, there is no purchase of stock in trade. Look at the trial balance. Why it is not so? This company is not a merchandising company, trading company. It's a manufacturing company. That is why it is not there. Look at this once again, you confirm. Anywhere purchase of stock in trade is there? No. Okay, so after confirming, I don't want to write there. If it is there, I will write it. Okay. Next, third item in the P&L account is under expense column, change in inventory. Change in inventory. Change in inventory. How do you find change in inventory? Except raw material, all the opening stock of inventory minus all the closing stock of inventories. What do you mean by all the opening stock of inventory? Opening stock of raw material, opening stock of finished goods, opening stock of stock in trade, opening stock of work in progress. All total minus closing stock of these 3. Write it somewhere. Change in inventory is equal to change in inventory is equal to change in inventory is equal to. Why do we need change in inventory? Change in inventory is one of the items under expense in P&L account. Okay, change in inventory is equal to opening stock of work in progress plus opening stock of finished goods plus opening stock of stock in trade. Opening stock of stock in trade minus, okay, all these things total, okay, minus closing stock of work in progress minus closing stock of finished goods minus closing stock of stock in trade. Okay. But now in this question, change in inventory. How do we find out change in inventory? Same logic only, but all the three are there or not, we don't know. We have to check it. Look at this note number. Opening inventory, how much given the question? Opening inventory. What is given in the trial balance is opening. Where is opening inventory? Asset side you see, debit side, opening inventory. Any opening inventory is there. First item is opening inventory. How much? 6,80,000. Closing inventory is given in the adjustment. How much it is? 23. That's what done here. Look at the note number. Opening inventory. Okay, opening inventory and closing inventory. Opening inventory is 6,80,000 minus 8,23,000. That's what you written the formula. Opening of all the three. Work in progress, finished goods, stock in trade, minus closing of all the three. Okay, now opening is given the question, how much? 6,80,000, closing is 8,23,000. So 6,80,000 minus 8,23,000 is equal to minus 1,43,000. Write it in the P&L account, minus 1,43,000. Minus 1,43,000. Change in inventory is minus 1,43,000. Minus 1,43,000. Okay. What's the next item? Employee benefit expenses. So you have to scan through the trial balance. What are the items given in the trial balance with regard to employee benefit expense? Go to trial balance. Expense is debit side. So debit side we see inventory, furniture, discount, loan. Advertisement is an expense, but it is not a employee benefit expense. Bad debt, commission, materials consumed, plant and machinery, rent, current account, cash, interest, preliminary expense. Yeah, wage is there, 9 lakh. Which one, sir? Is it an expense? What is expense actually? Salary you are giving, loan you are giving. What's the difference? You will not ask that employee to give back the salary in the future date. But loan means you will ask them to give back later days. So that's that's asset for us. Loan given to director is asset. Loan taken from director is liability. Salary given to director is expenses. So now we are talking about employee benefit expense. So you have to take only the salary, wage, etc. So wage how much? 9 lakh, and then yeah. So we have to come to the note number, next one. Employee benefit expenses. Only one is there? Okay, then we can write just like that. How much? 9 lakh. Employee benefit expenses 9 lakh. Within bracket, for your understanding, write only wages. If salary is there, you have to make one note and you have to add it together and bring it. Suppose in the adjustment they are telling you, out of the wages 9 lakh, 1 lakh was paid in advance. What will you do now? In this trial balance, we are finding the wage called 9 lakh. In the adjustment, nothing is there. Just I am trying to tell you, if it is there in the exam. Suppose point number 2. Point number 1 was closing stock. Okay. Point number 2, wage was paid 1 lakh in advance. So what to do? You have to take where only 8 lakhs. That 1 lakh will go to asset. Suppose it is given like this, 50,000 wage still outstanding. That time you have to take here 9 lakh 50,000. That 50 will go to current liability in the balance sheet. That's clear? Very good. So now employee benefit expense only 9 lakhs. Next item is amortization. That is not there in this question. So finance cost. What is finance cost? Interest paid or payable for the current year, and bank charges. Look at this question. Any interest expenses are there? Interest on bank loan, how much is there? 1,16,000 is there. 1,16,000 interest on bank loan. Is there any other bank loan? Interest on bank loan 1,16,000. And again, there is any debenture interest in the question? Yeah, debenture interest 55,000 is there. So take it together and write it. Okay, interest on loan, interest on bank loan, and debentures interest. The same logic works here also. If there is any adjustment given, you have to minus or plus accordingly. Interest still payable means you have to add and show that payable is liability. Interest paid in advance, you have to minus, and you have to show that payable, I mean the advance in the asset side of the balance sheet. Okay. In this question, nothing about the accrued and outstanding. Nothing is given. So next item. What is next item? Other expenses. Other expense means all other expenses apart from these 6 expenses. Look at the trial balance. Distribution freight is there. Trade expense is there. Transit insurance is there. Dealer's aid means what? What is dealer's aid? We don't know. We have to ask. Is it an expense? If it is an expense, you would add there. Dealer's aid means what normally? It left to the accountant to name some head of account. He has named it as dealer aids. What kind of dealer and what kind of aids it is, we don't know. So if we consider that as an expense, we have to write it in other expense. Suppose if you take it as a asset, you have to write it in asset side. Okay, now we'll see how he has considered, but normally it's an expense. Okay. Look at these other expenses. Yeah. Dealer's aid is expense he has taken here. Look at this. Consumables, preliminary expense, bad debt, discount, rentals. Rentals was given in the debit side. Look at this. Rental was in debit side. That's why it's coming here. Where is rentals? Yeah, rental was in the debit side. Suppose rental is in the credit side, means it will go to other income. Rent received will go to other income in the P&L account, second item. Okay. Right. So all these things we are adding together. Take this note and add it. Yeah, other expenses. Consumables, preliminary expenses, bad debts, discount allowed. Okay. Rental expenditure, commission paid, advertisement expenditure paid, dealer's aid, transit insurance, trade expenses, freight on distribution. All these expenses were taken from trial balance as other expenses. So we added together, that is summing up to 4,76,000. Bring that one to P&L account in the name of other expenses. Then you have to add all the expenses. Where it is? Yeah. Employee benefit expense 9 lakhs, other expense 1,71,000. Sorry, finance cost 1,71,000, other expenses 4,76,000. Now take the total expenditure. Total expenditure. After taking total expenditure, what should we do? We have to minus the total expenditure from. You have to minus the total expenditure from total income. Total income. You will get the profit. Yeah. Minus it. The total income was 43,24,000. Total income. You can write there. A is nothing but total income. B is nothing but total expenditure. So A minus B is equal to profit before tax. In this question, nothing is mentioned about tax. So we don't write anything under tax. We just put 0. So profit after tax also 6,01,000. This is how you have to make profit and loss account of a company. Okay, balance sheet. Any doubt in the P&L account? Profit and loss account, any doubt?
That will be also part of the trial balance.
Yeah, they will give you. Otherwise, after the trial balance, they will tell you. Either way, it is possible. If it is given only in trial balance, you just minus from here.
So then we don't
If it
need
is
to
given in
other-
two place, here also, and you have to write it in the liability also, other current liabilities.
if in trial balance, they say tax paid. Should I put it under
Here
other
only.
expenses?
No, no, no. Tax is not an expense. Please understand. Tax is not an expense. If you pay GST, that is the cost of the goods. If you pay tax on profit, that is the out of profit, not against profit. Expenses are against profit. Expenses are charged against profit. But tax is a appropriation of profit. Actually, if you don't have profit, you need not to pay tax. So it's called appropriation of profit. Once profit is there, you will have to pay tax. But expenses are not like that. Salary, you cannot tell to your employees, sir, I don't have profit, this month no salary. We can't say like that. So salary is a charge against profit. To the tune of increase in salary, the profit will reduce. Correct? No. In this case, salary we have taken some amount. Suppose salary is going to be increased. Other thing remains constant. What will happen to profit? Profit will decrease. That is why I'm telling the word. Expenses are charge against profit. Charge against profit. But tax is a appropriation of profit. I have a profit. What I'm going to do with the profit? Before you start doing anything with your profit, first government is telling, give me this much to me. Give this much to me. That is why it is called appropriation of profit. Okay, in one way. But if from the equity shareholder point of view, for them, after tax only their profit. They don't consider profit before tax is their profit. Because for them, tax is paid by whom? Company. Out of what? The profit. So how much ever you pay tax, that much ever the profit available to equity shareholder will come down. In that way, they may treat it as a expenditure. As an accountant, it is not expenditure, it's against profit. I mean, after profit. Next, balance sheet. Balance sheet of Haria Chemicals Limited. Yeah, balance sheet. This format is to be memorized by you. One or 2 days, you have to remember this format. Within 1 or 2 days, you have to memorize. Okay. It's very simple. There are 3 items in the balance sheet liability side. One is shareholder fund, non-current liability, and current liability. Okay. Asset side, 2 items. Non-current asset, current asset. Under that, we have some subcategories. Okay. Share capital, first one. Equities and liabilities. Same format you take. Particulars, note number, amount. 3 columns. Particulars, note number, amount. In particulars column, equity and liability is the Roman letter 1. Roman letter 1 is equity and liability. Under that, we have 3 subcategory. One is shareholder fund. Another one is non-current liability. The third one is current liability. Under point number 1, that is shareholder fund, we have 2 items. One is share capital. Another one is reserves and surplus. You just write whatever the question on this particular area. You write this format first. In the exam, whatever the question it may be, you write the format first, fully, without even leaving anything. Whether it is there or not, no worry. You write it. Then go through the trial balance. Pick the items wherever it is coming. You write a note. Prepare a note. From there, you bring to the balance sheet. Finally, after referring all the items in the trial balance, if any items are not there in the trial balance regarding the format, you write dash. That's all over. Okay, then you total it. Okay. So now share capital. What is called share capital? Equity share and preference share put together is called as share capital. So I have to go to trial balance. So in the trial balance, I have to check for capital. Capital or equity and liability will always be in credit side. Credit side. So I'm going to credit side. Look at the credit side. Equity share capital is there. How much? 25 lakhs. 11% debenture is there. Debenture is not a share capital. Bank loan, trade payable, sales, rent, transfer fee. That's all. Only one item is there. Capital only one. How much? 25 lakhs. I bring it to balance sheet. If there are two more capital, equity share capital of 10 each, 25 lakhs. Another one, equity share capital of 100 each, 50 lakhs. Then how much I will take to the balance sheet? 75 lakhs. 50 plus 25. And one more item is there. Preference share capital of 10 each, 5 lakhs is there. That also to be added. Equity share capital, whatever the number it may be, whatever the denomination it may be, plus preference share capital. All share capital to be bundled together. That total should be taken to balance sheet. So in this case, only 25 lakhs is there. So I bring 25 lakhs here. Look at this, 25 lakhs. Okay, next, resource and surplus. How do I calculate this resource and surplus? Listen, theoretically, last year profit and loss, how much is there in the balance sheet? I mean, P&L account, something is there. Last year, okay. That one plus current year profit after tax. How do you know current year tax, current year profit after tax? Just now we prepared. In our case, how much? Something is there. Okay. Add together. Minus appropriation of profit for reserve for the current year. You have to minus the reserve what you are creating out of current year profit. Last year profit plus current year profit minus transfer of current year profit to reserve. Left out amount is called surplus. Surplus. Clear? Okay. Then what is reserve? There are two items in that. Reserves and surplus. Now I told you how to find out surplus. How to find out surplus? Last year surplus plus current year surplus minus transfer of current year surplus to reserve. Suppose last year profit and loss account is 1 lakh. Current year profit and loss account balance is 1,50,000, assume. So total surplus is 2,50,000. Minus any surplus used to create a reserve for current year. Suppose in the adjustment they are telling you 50,000 rupees from the current year profit should be transferred to reserve. If that is the case, 1 lakh plus 1,50,000 minus 50. So how much will be the surplus up to now? 2 lakhs. So one part is 2 lakhs. Then reserve. Reserve. What was the reserve up to last year? Where you can find that it can be found in trial balance. Only statement for us is trial balance. So trial balance will talk about reserve. So reserve 45,000 is there. Assume that's the opening balance of reserve. Current year, how much reserve I created? 50,000. So 45,000 plus 50,000 is equal to 95,000 is the total reserve. How much was the surplus I told you? 2 lakhs. 2 lakh plus 95,000 is equal to reserves and surplus. 2,95,000. Is it clear? Same thing. They have done it. Just look at it. Note number 2. Go to note number 2. Look at this. Balance as per the previous year balance sheet. What was the balance given there? Look at the balance sheet, liability side or the credit side. 1,39,000 is the profit and loss account of last year balance. 1,39,000. 1,39,000. Okay. 1,39,000 is the surplus of opening balance. Last year closing is current year opening. 1,39,000 is the surplus. Okay. Plus current year profit and loss. How much you found out already? This is called current year surplus. So last year surplus plus current year surplus is equal to 7,40,000. Total surplus available is 7,40,000. In this question, there is nothing about reserve. Look at how do you find out where the reserve will be? Reserve will be in the only credit side of the trial balance. Look at the credit side trial balance. Bank is there, debenture is there, trade payable is there, sales, rent, transfer, depreciation, machinery, profit and loss account. Only that much is there. There is nothing about reserve. So I just leave it. Okay. So total will be how much? 7,40,000 is the only surplus. There is no reserve. But we write in the format reserves and surplus. Suppose if it is reserve, last year reserve plus transfer of current year reserve put together. Okay, write it 7,40,000. 7,40,000 is the reserves and surplus in the balance sheet. 7,40,000. Next, point number 2, non-current liabilities in the balance sheet. Non-current liabilities is the second heading. Non-current liabilities. Under that, point number A, long-term borrowings. What is long-term borrowings in this company? Long-term borrowing is a liability. So you have to check in the credit side of the trial balance. Debenture is there, 5 lakhs. So bring that 5 lakhs here. Long-term borrowings, note number 3. Debenture, 5 lakhs. And there is a bank loan. Bank loan is there in the trial balance. It is not given, it is a long-term or short-term. Look at the bank loan. Where is bank loan credit side? Yeah, bank loan is second, next item. 6,45,000 is there. It is not given there any long-term or short-term. So I am assuming it is a long-term. Normally it is a long-term. So these two are put together. We call it as long-term borrowings. So long-term borrowings is going to be 11,45,000. How it is 11,45,000? Bank loan plus debentures. 11,45,000. This 11,45,000. Okay. Next, third item in the balance sheet is current liability. There are so many current liabilities we discussed while we are writing the format. In this case, only one current liability is that is trade payable. Look at the trial balance in the credit side for the liabilities. Look at this. Only trade payable is 2,81,000. Remaining are not a current liability. Equity share will be taken, bank loan debenture we taken, sales taken, rent received taken, transfer fee also taken. P&L account we already considered for calculating the reserves and surplus. Okay, depreciation provision we have to consider later for machinery. Okay. Now only one item is left out, that is trade payable, that I have taken. Current liability 2,81,000. This 2,81,000 is coming from here. 2,81,000. Okay. That's all about the equity and liability. Take a total. Total of equity and liability. Total of equity and liability. Total of equity and liability is equal to 46,66,000. Next, Roman letter 2, assets. The next major item in the liability is, balance sheet is assets. Roman letter 2, assets. Under assets, we have two headings. One is non-current asset. Another major heading is current assets. So write first one, non-current asset. In non-current asset, we have different types. What is that? Fixed asset. Under fixed asset, we have two types. What is that? Tangible and intangible. What is this PPE he has written? We have to check it. Okay, you don't write like that. You write non-current asset is the heading, right? Non-current asset is the heading. Okay, under that, what's the format we have taken? Look at the format what we have taken. Non-current asset. Under that, point number 1 was fixed asset. Under that, point number A was tangible asset. Right? Tangible. Like that you write it. Like that you write it. Non-current asset. Under that, point number 1 is fixed asset. Under that, point number 1 is tangible asset. So what is the tangible asset? Come to trial balance and check for tangible asset. Asset means it will be the debit side. So go to debit side. Furniture, plant and machinery, fixtures, freehold land, tools and equipments. That's all. So come to the note number, check it here. Freehold land, furniture, fixtures, plant and machinery, tools and equipments. They have taken it. Okay, but there is only one item has depreciation. Look at the depreciation in the trial balance. In the credit side, they have given you depreciation on machinery is 1,46,000. So I'm minusing the depreciation on machinery 1,46,000. Only from machinery, I'm minusing 1,46,000. Remaining all the same amount, meaning there is no depreciation. Okay. So total amount, how much I have to show in the balance sheet in the name of tangible asset? 30 lakh 5,000. How I got 30 lakh 5,000? Total of all the assets value given in the trial balance, total of all tangible assets value given in the trial balance minus depreciation on such assets. Okay. So total is 3151, 31 lakh 51,000. Depreciation is 1,46,000. So the remaining amount is 30 lakh 5,000. Is it clear? Okay. So 30 lakh 5,000, you bring it to balance sheet in the name of tangible assets. Tangible assets. Okay. Next point number 2 is intangible asset. Look for the intangible asset in the trial balance. Look for the intangible asset in the trial balance. Trial balance, we'll talk about asset only in the debit side. So I'm going to debit side, intangible. Intangibles are nothing but goodwill, trademark, patent, etc. For that, I'm checking for. Yeah, goodwill is there. How much is there? 2,65,000 goodwill. There is no adjustment given about goodwill here. If it is given, write off goodwill, some amount, then you have to minus that amount, and that will go to P&L account also. Okay, yeah. So now goodwill is written here. What's the amount of goodwill? 2,65,000 is written here. 2,65,000. Okay. Next heading is current assets. Now non-current asset is over. Next heading is current asset. So current asset, how much? There are so many subcategory of current asset. First one is inventory. We already know inventory. What is inventory? Where it is given? What is it inventory? Closing stock of inventory. Where it is given in the question? Adjustment. How much it was given? Look at the adjustment in the question. Look at the question. Look at the question. After the trial balance, there is an amount given 8,23,000. That's called closing inventory. That will come under balance sheet under the name of inventory. 8,23,000. Then trade receivable. Trade receivable we have to find in the debit side of the trial balance. Look at this trade receivable. 4,40,000. Okay. 4,40,000. 4,40,000. And then cash and cash equivalents. Cash account and bank account, look in the trial balance. Debit side, you have to see. Cash account is 8,000. Is there any bank account? Yeah, current account. Yeah. Current account 45,000. So 45 plus 8, 53. 53 should be written here. Cash and bank balance. Cash and bank balance. We written as cash and cash equivalent. They written as cash and cash, sorry, cash and bank balance. Both are same. Next, short-term loans and advances given by our company to outsider. Yeah, anybody. Employees also outsider only. According to accounting, employers are outsider only. Okay. Yeah. So there is a loan. Debit side, look at this, debit side. Loan to director, fourth item is there. Loan to director, 80,000 rupees. Any other loan is there? No. So you take 80,000 rupees. Short-term loans and advances given to director. Given to director, 80,000. That's all. Now, before you close this balance sheet, before you total the balance sheet, you have to check. Now answer is there, so we have taken the total of assets, liability side already. Otherwise, you have to give some 2-3 lines here, and you have to start assets. Write everything. So before you totaling assets and liability side, what should you do is you have to confirm all the items in the trial balance and adjustments were taken care, meaning were recorded in the respective places. So after confirming 100%, the records are, all the items are recorded. Then you have to take a total. Even after that, if you find some mismatches here, then you have done some mistake. Once again, you have to check all the items are recorded. Then you have to check all the items are properly recorded. Okay, now you take a total. Asset side total. For that, what you do is in exam, if it is a offline exam, in the question paper, what should you do? In pencil, you can just tick all the amount one by one whenever you are considering that into total, considering that in the recording. Okay, so that you can check in the last time everything is recorded, all are ticked. Okay, so 46 lakhs 66,000 is the total of asset side, which is exactly the same of the total of equity and liability. So the balance sheet is tallied. So what's the purpose of this balance sheet as well as the P&L account? We prepared now to know the financial performance. What is the financial performance of this company? Financial performance. This company has performed a profit of 6,01,000. Well or not, we have to do later. Now, how much the company has performed? 6,01,000 is the profit after tax for this year. Similarly, the company's financial position is 46,66,000, comprising of current liability of 2,80,000 and non-current liability of 11,45,000 and the share equity of 32,40,000. Accounting equation, you remember accounting equation. Now this company's accounting equation is equity how much? 3240. How 3240? 25 plus 7.4 plus liabilities. How much liability? 14,36,000 or 26,000. 14,36,000 is the liability. That is equal to total of assets. Can you write it, please? Accounting equation. Accounting equation. Accounting equation. You remember I was telling you in the beginning, balance sheet is nothing but the expression of accounting equation in the form of a statement. I told you. Now we are going to check that accounting equation. So what is accounting equation first? Equity plus liability is equal to assets. Equity plus liability is equal to asset. Okay. Now in this question, what is equity? Next line, write it. Equity is equal to share capital plus reserves and surplus. Equity is equal to share capital plus reserves and surplus. That is equal to how much? 25 lakhs plus 7,40,000. 25 lakhs plus 7,40,000. How do I know? It is given there. I have just prepared that balance sheet. Next line. Liability is equal to current liability plus non-current liability. Current liability plus non-current liability. That is equal to 11,45,000 plus 2,81,000. That is equal to 11,45,000 plus 2,81,000. That's equal to how much? 14,26,000. Write it. Take a correct total and write it. 11,45,000 plus 2,81,000. 14,26,000. Next line. Asset is equal to non-current asset plus current assets. Assets are equal to non-current asset plus current assets. That is equal to 32,70,000 plus 32,70,000. How 32,70,000? Yeah, these two are called current non-current asset. No, 32,70 plus all these things total how much? No. Only this, only current assets. Only current asset. How much? Only current asset. How much? 4,40,000 plus 53 plus 80 plus 8,23,000. How much? Otherwise, you can minus 4666 minus that one 3370, 3270. How much? Total of current asset. Assets are equal to current asset plus non-current asset. That is equal to 32,70,000 plus 13 lakhs 96,000. Right. 13 lakh 96,000. Yeah. Therefore, last line. Therefore, asset is equal to. Therefore, asset is equal to 46,000. 46 lakhs 66,000. Asset is equal to 46 lakhs 66,000. The last line. 46 lakhs 66,000 is equal to 46 lakhs 66,000 is equal to what is your equity? You already found out. You already found out now. 32 lakhs 40,000, right? 3240 plus total liability. How much? Yeah, that you can write it. Equity plus liability. Sorry, equity plus liability is equal to total asset. Just write the value. That's all. Equity value, write it, plus total liability value, write it. That should be equal to 46 lakhs 66,000 of value of asset. Just we are writing it for our own understanding of this accounting equation. Otherwise, the account is already over. The answer is already done. This is not a part of answer for balance sheet and P&L account. This is only for our understanding. We are just trying to understand. Okay, how assets are equal to liabilities plus equity. In exam, if you are asked to prepare only balance sheet and P&L account, you stop there. Don't do this. Okay, this is not required. Okay, so that's all for today. Any doubt before we wind up? Balance sheet. Only this is the balance sheet. Only this is the P&L account. Okay, you should not do any other format. I'm telling you. And one more thing, whatever the items are coming in the trial balance, that should fit under the format what we have taken. Okay, by taking care of that only, that format is given to us. No items are left out. It should come under any one of the category. So basically, if you write wages in balance sheet, I will give you 0. Where you write wages? P&L, expense, expense side, employee benefit expense. Okay, if you write wages in the balance sheet, you will get 0. Suppose you are writing a land and building in P&L account, I will give you. You are asking me, you are forcing me to give you 0. Meaning, I already told you very clearly, trial balance will have n number of items, 100, 1,000, no problem. But all those n number of items should fall under 5 headings. What are those 5 headings? Income, expenditure, asset, liability, equity. Only 5 headings. Equity, liability, asset should go to balance sheet. Income and expenditure only should go to P&L account. If you change, this is not any Himalayan task. This is a very basic. Okay, n items are there. We are grouping the n items into 5 categories. 3 we are taking to balance sheet. 2 we are taking to P&L. If you cross, if you just do some crossing in this, you deserve minus. But there is no option for giving minus. I'm giving you the least or maximum of minus is 0. Or least of plus is 0. I'm giving you that. Is it clear? This is a caution actually. Because later you should not blame me, sir. I have done everything correctly. Only the building I put it in P&L account and wage I put it in balance sheet. But that's the basic. If you do not know that, then I understand you don't know P&L account and balance sheet. You randomly put all the items here and there. That does not deserve any mark. Only 0. Okay. In totaling or in calculating cost of goods sold, cost of materials consumed or employee benefit expense totaling, if you done here and there some mistake. In this question, you see there was an item called customer aids, something was there, dealer aids. Even I don't know exactly what it is. So I'm referring the answer. If that kind of item is there, you are taking it as an expense, no problem. Or you taken as a deposit. Sir, I have given some deposit to, or I have created some facility for dealers. That I call it as dealer's aid. So that's my asset. No problem. That kind of understanding is good. Otherwise, you should follow this format.
But it has to be opposite. If it becomes an income in PL, it has to be a liability in balance sheet.
No, actually it's two possibility. It can be an expense or it can be a asset because it is given in the debit side of the balance, trial balance. Again, debit and credit, please keep in mind. Debit side is either it can be an asset or it can be a expense or it can be a loss. Credit side means it should be a liability or it should be an equity or it should be a income. Only three possibilities. Or gain. Okay. Gain means income only in this context. Okay, only this understanding. So based on this, you have to make balance sheet and income statement. Okay, I'll share this file and also some more file. I have to trace it out from my laptop. I thought I have uploaded and it is not there. If it is confused by somebody or I have not uploaded, no problem. I'll check it and I'll try uploading that file also. Minimum 4 to 5 questions. You just work it out. Don't see just like this. Take a paper and pen and work it out, balance sheet as well as P&L account, so that you will be comfortable in preparing this. Before doing that, read some theory given in that file, and also you have to memorize this format. The format itself will give you some mark. If you prepare this format, I understand, okay, you have done some effort, you have taken some effort to understand the balance sheet and the P&L account. And here and there you are taking the amount correctly and writing it. Clear to you? Any doubt before we wind up? Anybody, those who are online? Any clarification required? Second assignment I'll upload. Okay, second assignment I'll upload in the LMS, and they are telling there is one more ERP. So, yeah, they have given me the credentials. I'll just start uploading some material there also. They're forcing us next year onwards. They're going to only use that. So we have to get used to that. So I'll upload, and you are instructed to upload your assignment in both. Okay, no, not showing. Okay, because I did not create a link, so it's not showing. But they are telling you are supposed to upload in both. So I have to create a link. Whatever you uploaded here, you should upload there also. That's what they told me just now. I'll create that link also. So you take care. You are uploading it. Okay. And some students, they told some people are telling that they are not able to upload it. In Office, they have opened that link also. Those are not able to upload. So you have to upload it as soon as possible. Okay. Anybody wants to say anything? Any news or any information to me? Any instruction? Any advice or any doubt or queries? Online, anybody is there? Or all of you gone for lunch? Already 10 minutes over.
No, we're there. We're there.
Yes. Okay. If you are going for lunch also, you can talk. No problem. Anybody? Yeah. Okay. If you are not having any question, we can wind up now. If you have any queries, you can send a message in WhatsApp. Okay. Or you can call me also. Don't just send, sir, I am not able to upload this file. Word. Somebody is asking some small doubt. Meaning, sir, should I write or should I upload Excel file or should I upload a Word file? It is clearly given there. No, you have to convert it into PDF and you have to first read the instructions. Then if you are not able to understand, you ask me. Okay, some questions I may not be answering by thinking that it is already there in the description of assignment. Okay, sometime I will tell you read the description again. So don't get offended, sir. Why you are telling read the description again? Okay, that has some meaning in that, so you do it. Okay, thank you so much. See you in the next session. Yeah.
Thank you, sir.
Thank you.
Thank you, sir.
So these
So
two
2 weeks
documents.
over, so please go through this something. Otherwise, you'll forget the numbers and accounts. Before 2 weeks only we met, I think, right? 15 days over.
So these two documents can be put in WhatsApp so that we can refer.
Yeah, sure. I'll do it immediately.
Yeah.
You can help
Thank
me
you.
now. I'll give this. You can put it in WhatsApp.
Because today we have time, so we'll just refer it whatever you have taught.
Sure, gentlemen. We will do that immediately. Yeah, anybody can help me? Those who are here. These two documents, they need it in the WhatsApp. How do you do it? Thank you. I'm just winding up. Bye.
Thank you, sir. Thanks.
Thank you, sir.